The only thing that we're absolutely sure right now is that the economic situation is very different from the one that we were facing 4 or 5 months ago. Nobody could really see it coming, but you've seen the joke of COVID-19 being the most influential driver of digitalization in enterprises all over the world. That usually happens when you have a huge crisis. When the situation is tough, you just have to shed old inefficient habits, processes, technologies which drag your business down, but so far there was no need to get rid of them as the businesses was generating healthy revenues. History shows that the companies who will wisely invest in people, tools, new business models are more likely to thrive than the ones that are merely cutting the cost just to survive. I believe that we should take a deep breath, look around to see if the things that we're doing are there because they make sense, they deliver actual value, or they are just there because we've always done it like this. In the financial industry, there's of course additional driver for change. Near zero interest rates have been with us for more than 10 years now, but right now central banks all over the world have decided to drive them even lower. If you combine it with increasing credit default risk popping up as the result of companies going bankrupt or at least delaying payments, you have a substantial threat not only to banks but also insurance companies. Luckily, the industry was in much better shape to face this crisis than it was in 2008. What we observe in Comarch is after the first couple of weeks of uncertainty, there's a growing interest in automation. Decision makers are well aware now that the existing business models are simply inefficient and just have to be improved. All eyes now are on the technologies that can eliminate manual tasks, remove a need of physical presence of a customer in the branch, shorten business processes, or help to discover meaningful information in a vast amount of data and use it to provide advice to customer, agent, or relationship manager. Things that were also unthinkable even a year ago, such as cloud computing for the financial industry, are right now gaining their momentum. CIOs finally believed that with the right security measures, cloud can be a valuable add-on to their in-house technology stacks, lowering the risk of operations and providing the scalability so much needed these days. Of course, in my opinion, that's just the beginning. Once the economic situation clarifies, we'll probably see a more courageous approach to artificial intelligence, which so far is treated as a gadget, but it has already proven itself in so many places in modern economy that it's a no-brainer that RPA 2.0 will be based mainly on intelligent robots, neural networks, machine learning, rather than algorithmic approach which dominates now. Nobody likes to face the crisis. Change is not always welcomed, but if we play it right, we may create the world of financial industry a better one for consumers, helping them to address their needs and expectations and still providing a healthy revenue and decent returns for the shareholders. COVID-19 may be a driver for a change, but it is the technology that provides the toolset.